Stocks fell today after investors had a lot of moving parts to digest. News that the International Monetary Fund is throwing a lifeline to Europe gave a boost to stocks around midday. The IMF approved two new lending tools. One is a credit line that allows countries in the Eurozone to borrow as much as 10 times the amount they put into the IMF. However, it's unclear how much this latest fix for Europe will last. The euro was gaining after the news, but borrowing costs in Italy and Spain continue to rise. Later in the afternoon, minutes from the latest Federal Reserve meeting gave something else for investors to ponder. The central bank did consider further monetary easing earlier this month, but the report said only, quote, a few members actually think additional action from the central bank is needed. Stocks were sinking going into the close, indicating that investors aren't too convinced that Europe's latest strategy is a game changer, and economists were saying that the Fed's report was a whole lot of talk and probably won't lead to any sort of aggressive action anytime soon. Finally, the market couldn't escape bad news from the morning that economic growth in the third quarter was actually weaker than expected. GDP growth got cut from 2.5% to 2% on a yearly basis. The new estimate was a disappointment, especially since U.S. economic data has been better than expected recently. By the close, the Dow lost 54 points after it was down some 108 points during the trading session. The S&P 500 was down 5 points, and the Nasdaq shaved off 2 points. All still better than the lows of the day, but nothing to celebrate.